Welcome to this super webinar where today we're going to talk all about stocks, all about day trading stocks, swing trading stocks, and options. It's going to be a really fantastic day. This event is brought to you by TimingResearch and TradeOutLoud, and the event is being recorded. All the recordings will be available as soon as they're processed on the TimingResearch website and also on the TimingResearch YouTube channel. So before we begin, let us remind you that everything that we will be discussing today will be for educational purpose only. It should not be construed as investment advice regarding the sale or purchase of securities, options, futures, forex, or any instrument of any kind. Trading involves a high level of risk and may not be suitable for all investors. You could lose money. So before deciding to trade, you should carefully consider your objectives, level of experience, and risk appetite. Individual performance depends upon each person's skills, time commitment, and effort. Results may not be typical and individual results will vary. So you must do your own research and take your own trading decisions. So with us today to kick off the event, we have AJ Brown. AJ, you have the mic.
All right, fantastic. Thanks, everybody. And thanks, Synergy Trader, for having me here today. Hey, guys, I've got a presentation that I'd like to give you for the next 55 minutes. Here's my 2 cents. Have some paper, because I like to punch a ton of information. So I want you to take lots of notes. So here we go. It's called Discover the Exact 4 Strategies for Making Serious Investment Income That'll Turn You into a Trading Pro. Let's get into it. Anka did a great job giving a disclaimer. Same a disclaimer here. I just want to make sure that no black helicopters are going to be landing in our front yard. So we're just giving examples today. Nobody's giving financial advice. We don't trade on anyone's behalf. We don't recommend or receive any payments from any broker. In fact, I like saying that I'm very much broker agnostic. You can use any of the strategies I teach you with pretty much any broker that can handle options. So here's a couple of facts. Right now, I think we can all agree that there's a lot of uncertainty with what's happening in the world right now. But in the markets, if played right, you can be set up for months, if not years to come. It's all about being on the right side of the equation, because a lot of people, especially when you watch the talking heads, they're like, oh my gosh, trillions of dollars disappeared today in the market. That's not really true, is it? Because money is created. It's not created or it's not destroyed in the markets. It's simply moving from one person's hand to another. So the key is putting yourself on the right side of the equation. And that's today we're going to talk a lot about putting ourselves on the right side of the equation. But before I even get further, I know you've seen this back and forth before, and I've got my chat screen up. So question, $50,000 today, or would you take a penny that doubles every month, every day for a month? Let's go through the math. So if you take that penny, day 1, you've got a penny, 2 cents, 4 cents, 8 cents on day 4. At the end of the first week, we're kind of regretting that we didn't take that $50,000. We've already had a week go by. If, say, for instance, we only lived a month, oh my gosh, we just went through about a fourth of our life, a fourth of that month, and we've got 64 cents to our name. But let's keep going. So on day 8, day 9, day 10, we're about a third of the way through the month. We got $5.12 to our name. Still regretting not taking the $50,000. Hey, let's go to about 2 weeks. 2 weeks, we've got $81.92, about $82. Still nowhere near that $50,000. At day 15, about half the month, we still have nowhere near the $50,000. We're starting to sweat here. Okay, day 16, 17, 18, 19, 20. Here we are 3 weeks in. Now we're getting some money, but we still haven't gotten anywhere near that $50,000. In fact, it's not until day 24, until almost the whole month is over, that we finally surpass that $50,000. And then for those people who stuck with it and didn't lose it, by the end of the month, we had $21,474,836.48. In other words, taking the penny was the right decision, but sticking with it and not getting distracted and getting off base even in the first, second, or even third week of our exploration, because anybody who gets into something and then doesn't stick with it, well, it's not going to pay out, is it? You've got to stick with it. You've got to be consistent. By the way, what we just demonstrated is compound interest. A lot of folks say this is the most powerful force in the universe. In fact, they attribute it to Albert Einstein. I'm not sure if he actually said that, but it really is, isn't it? Now, I want to show you this chart. I want to kind of tattoo this into your brain here. I want you to see this. I'm going to revisit this at the end of the presentation, but I want you to notice we've kind of got our break-even point right here. It didn't get labeled very well, but if I put a 0 right here, you'll see it. And you'll notice that we've got basically a set of bands here. And as we go along, well, first of all, this range low, it soon becomes greater than break even just as we get to this number 2. The range high is above break even from the get-go, and then it goes up exponentially. Now, I want to talk about that more, and I'm going to revisit this because it's going to make more sense, but I wanted to get this imagery into your heads because it's quite important. Okay. Going back to that compound interest, if you reverse engineering doubling your money, if we wanted to double our money every year, here's what we would have to do. We'd have to focus on 6% every month. If you earn 6% every month, and this is simple interest, not even compound interest, 6%, your investment will more than double every year. So let's make sure we've got that tattooed in our brain. I'm going to ask you a little quiz question. Please type it into the chat. What minimum returns must you make monthly on your portfolio if you want to double your money annually? Is it 0.5%, 1.5%, 5%, 6%, or 10%? What do you think? Give you a couple more seconds to think that through. I know we start off a little bit easy. Some of you are saying, ooh, some of you are saying, I'm glad this is the first thing we're doing in the morning because I need my cup of coffee. If you said 6%, you're absolutely right. We focus on 6%. Now, that doesn't mean we're going to just earn 6% per month, but that's where we aim. We aim for the moon, and perhaps we're going to overshoot to get to the stars. But we're focusing on 6%. I'm not going to give you any fake claims that you can double your money overnight. I mean, you can, but that's not going to happen every day. What we want to focus on is something that's doable, 6%, right? Okay. So if we start with $1,000, which a lot of the folks who do my program start with even less than $1,000, and we do this 6% every month consistently, well, then in the first 12 months, you'd turn that $1,000 into about $2,012. 2 years, you got $4,048. 5 years, you've got $32,987, almost $33,000. And in 10 years, you'd be a bona fide millionaire. Now, this is totally doable. In fact, I'm living proof of that, as are many of my program participants. In fact, I want to give you some real life statistics right now. Our program participants that we're following, they're not earning 6% per month. They're earning double digits per month. And so what's cool about that is they're actually doubling their money every 5 months instead of every year. So you could speed this up. But again, worst case scenario, we focus on doubling our money every year. And if you start with $1,000 in 10 years, you're a bona fide millionaire. The other cool thing is if you grow your portfolio to just $100,000, then that means if you just want to create an income, your portfolio is going to generate over $100,000, $101,219.65 per year. And if you think about that, the mean salary in the United States is $87,000. $87,000. And that's somebody who is working about 60 hours per week. Here, in this case, we're having our money work for us as an investor, and we're making more than the mean salary in the United States. Now, the question is, could you live on $101,219.65 per year? Now, you might be asking yourself, okay, what the heck are we actually investing in? So what I'm focusing on is selling, being on that side of the equation, selling theta decay optimized option premium. Now, what the heck does that mean? I profit on time passing by using options. Well, aren't options risky? Well, the cool thing about options is not only can you make money like you can with stocks and commodities where the price of the option goes up, but you can also make money if the market goes down. And what I like is you can make money if the market stays going sideways. If you take a look at a lot of symbols over time, you realize that they spend a lot of time going sideways. But the other thing about the flexibility of options is, of course, you can make money as time passes by. And you can also make money on if there's an overall fear or confidence in the market. That's why a lot of people pick on futures and options, because there's so much flexibility. Also, options provide a great source of leverage. I'm going to show you that today when we supercharge and put on steroids our premium selling. So, okay, some of you are saying, hey, I know I'm here at Options Day, but what the frick is these options? It's a financial instrument. It's called a derivative. And they're typically bought and sold to hedge risk. And they're sold against stocks, indexes, ETFs. At least that's what I focus on, is these equity options. But that's not how I'm using them. I'm selling their premium to generate consistent income. So again, what the heck does that all mean? Well, how many of you, and I'd just like to get an idea, how many of you have followed me and my content for a while, or perhaps you've heard of me, but you're not sure when and where that happened, or maybe you have no idea who I am? I'd like to get an idea of what you've got. Okay, it seems like there's a little mix of all of it. So let me just give you a quick reminder of who I am. I founded a company called Trading Trainer back in 2003. A lot of people call me the world's most disciplined option trader. I think behind my back, they call me the laziest option trader. That's because I like to take the fewest steps to get from point A to point B. A lot of people in the industry know me as somebody who in his late 40s has decided to become a trapeze artist, right? I've decided to run away and join the circus. And that's not because I spend my time in front of the computer. You know, the last thing I wanted to do in 2004 when I left my day job was to create another day job. So instead, I figured out a way in order to create a consistent income flow without actually having to be in front of the computer all day. I basically fool around all day and have fun. I've been doing equities and options trading since 1997. As part of Trading Trainer, I've been giving my daily insights 5 days a week since 2002. And a lot of people have this ebook on their computer, The 7 Strategies of Successful Option Traders. That was mine. A lot of people have this home study course that I did and it's still available on their bookshelves. But the key thing to know is I'm a learner just like you. In fact, I've got a degree in mechanical engineering, with a focus on automatic controls. That means I really have become a specialist of the marrying of electrical and mechanical engineering. But the truth is after I got out of college, I didn't use any of that. I went into marketing. I've got a strong background in commercial business and investing. And one of the things I picked up in my late 30s, about 10 years ago, was this thing called accelerated learning methods and techniques. And I'm really proud of that. It means that I can teach things to you, even if you're young or if you're old, if you're, no matter what creed, religion, color you are, whatever, whatever it is. And I've learned methods to be able to impart that knowledge in a very fast way, because, there's a lot of folks who can be successful at something, but can they teach it? That's something you have to ask yourself. Also, I want you to know that when I first started, I lost really big. In fact, I spent $27,000 in 1997 on seminars, but even more, I spent $85,000 back, giving money back to the market, right? That was more than my graduate degrees cost. That was more than my undergraduate degrees cost. It was like a whole nother college. And I don't know how many of you can identify with that, right? But you know, back then we used to go to hotel rooms and you'd go in on like a Saturday and you'd spend half a day. And the next thing you know, you paid a whole bunch of money to come back for Sunday. And then the next thing you know, you paid a whole bunch of money to fly somewhere. And I got really quickly, I figured out how, you know, who was for real and who wasn't as far as teachers go. But the real thing is, and I'd like you to write these down, how to crack the code in 4 shortcuts, right? This is what I learned. First of all, as I hinted at in the beginning, when we did that conversation around the penny versus the $50,000, make sure you stick with something. And I don't care if you know, focus on options and selling premium like I do, or Forex, or whatever is your fancy. Don't chase the next shiny object that shows up in your email inbox. Pick the thing that jives with you and stick with it, right? Settle on one type of investing and then learn it well and stick with it. Consistency is the key. Number 2, hire a mentor who's currently doing exactly what you want to do and knows how to teach. It's really important, both of those pieces. Learn from guided discovery. It's so much easier than learning from trial and error. Folks in my program are able to do what I did, and it took me 5 years to be able to figure my stuff out. But by following in my footsteps, people are doing it in 2 months, 3 months, even as little as 2 weeks, right? Also, I suggest heavily that you join an investment group. Not only can you look over other people's shoulders and leverage with pride, but you also get accountability. And a lot of times we'll do things and we'll stick with things if other people are holding us accountable more than we'll do it for ourselves. And last but not least, surround yourself with like-minded investors, because especially if you start dabbling in things like options and futures, the average person will tell you that, hey, that's too risky, but they don't even know what they're talking about. Surround yourself with somebody that when you have a winning trade, they'll celebrate. When they have a losing trade, they'll keep your momentum going, right? Hope you wrote those down, because this is the formula I followed exactly. All right, so let's get back into, oh, I got to tell you, I forgot all about this, but I'm glad that my I'm glad that my slide preparers put this slide in here. I always like to talk about my foundation, because that's actually where, you know, that's something you need to know about. You know, if you think about when you buy some of these different programs in investing, how much they cost, and you look around the room at how many people, or virtually how many people buying these programs, you realize there's a lot of money in just selling education. In fact, a lot of the folks, and I'm not saying anybody who's involved with synergy trading, but there are people out there who have either never done investing, or it's been like decades since they've done investing. And the scoop is you can make a lot of money selling education about trading, right? One thing that we have is we started a foundation. In fact, I started a foundation in 2003. I started with 9 historically underserved inner city kids in Denver, and I took them off the street. And the cool thing is we didn't have access to computers or high-speed internet at the time. In fact, at that time, it was called DSL, digital subscriber lines. So we had to do everything at the library, and the library limited us to 30 minutes per day on the computers before they kicked us off for other people to get on them. And these 9 kids, at the end of the 6 months that they spent with me, I gave them each $2,000 of my money. I figured I was just going to have to take a loss of $18,000, but I wanted to see what they could do. And I'll tell you that each one of those kids paid me back. Not only did they pay me back, but most of them went off and bought their own computers and got their own internet connections. One of them actually graduated from Denver University now as a financial planner. And yeah, I'm so proud of this original class. And we've been doing this every year. In fact, we've moved it to Chicago, and we've partnered with the Chicago Board of Options Exchange. And we've got this foundation. Last year, we graduated over, even in the COVID times, over 170 inner city kids from Southside Chicago. So What's neat is all the people who work at Trading Trainer, we give all of our profits to this foundation. So if you talk to any of the coaches or anything like that, you'll realize that they're actually working pro bono, and they just like working with folks. They get the benefits of being involved with folks actually talking about trading every day, and all the profits that come from whatever program costs that people pay for us, we put right into the foundation. So that's something a little bit different about our company, and I kind of designed it that way. All right, now it's time to get back to the topic. Let's talk about selling premium. We focus on 4 simple transactions. I want you to write these down. Here we go. We like to write covered calls. We like to write covered puts. A lot of people aren't familiar with writing covered puts. That's flipping the covered call upside down, making money when the market goes down. We like to write covered calls against leaps. This is supercharging our covered call writing. For those academics out there, this is a variation of bull call diagonal debit spreads. And we also like to write covered puts against leaps. That's the same thing, except we're talking about the covered put. This is a bear put diagonal debit spread. This is kind of supercharging the covered puts. Now, here's another thing I'd like you to notice. Covered calls, the writing covered calls against leaps and the writing covered puts against leaps, those are cash trades. And that's important because a lot of my folks like to do this in their retirement plans, their SEP plans, their IRAs, and you need to be able to know how to do this in a cash trade. I want you to do notice that writing covered puts, it does require a margin account. So I want you to just note that on your piece of paper. So a lot of folks are saying, okay, you keep throwing around this term option premium. Listen, an options price is equal to 2 different components. If you look up a price on the CBOE, you'll notice that there's an in-the-money value and a premium value, right? If you take the in-the-money value or the intrinsic value for you academics out there, and you add it to whatever the premium value is or the extrinsic value, you're going to get the options price. So let's run through an example. Last night's closing price for General Electric was $13.73. Now, if I bought that and then immediately sold the July $14 call slightly out of the money, I'd make 41 cents. And generally, I target my expiration dates about 3 to 5 weeks into the future. So if I do that, I'm going to immediately create for myself an instant dividend of $41 per option contract sold. And that's because options are sold in lots of 100. That 41 cents is going to give me a discount on that General Electric stock, right? It's going to reduce my cost basis, and it's going to act as an expiring coupon because as time goes by, I'm going to get to keep more and more of that 41 cents until finally it expires worthless and I get to keep it all. So let's go through some scenarios. If GE closes above $14 on July 16th, okay, I paid $13.73 for my share of stock. I'm going to get the $14 as I get exercise. That's 27 cents of profit right there. Plus, I get to keep the 41 cents from the expired option. That's a total of 68 cents of total profit per share, or a 5.1% ROI. That's if I get exercised. Now, this is the ideal case. What if GE goes sideways? Well, okay, I paid $13.73. I collect 41 cents, and that when that option expires worthless, I get to keep the 41 cents because I'm on the right side of the equation. I've got 41 cents to profit to date. That's 3% so far. And I'm going to do it again and again and again. It's going to create an ongoing income for me. Some of you are seeing the power there. What if GE drops by July 16th? Okay, this is important. I paid $13.73. I got a 41 cent discount. That creates a profit buffer of 41 cents. That means the underlying symbol can drop all the way down to 13.32 and I have nothing to worry about. I'm still in the black. Now, I'm going to show you in a couple of moments. I'm watching my clock because I know I've got limited time, but I'm going to show you how I can greatly increase my reward on risk, even if it goes below 13.32. But I just want you to know that built into these strategies, I've already got a profit buffer. How's that sound? In fact, before I go any further, I do want to show you an example of just this happening. I bought some Ford on April 21st. I think you can see that. I bought 1,100 shares for $11.60. And then a couple days later, I like to leg into my positions when I can get the better price. About 7 days later, I went ahead and sold my covered call for 55 cents. That reduced my cost basis down to $11.07. I'm including some commissions in here. That when it came to the May 21st date, that option got exercised. I got to keep the 55 cents. I got exercised at $12.50. I wound up walking away in just 1 month with 12.2%, right? So that's a real life example. Now, really quick here, I want to quiz you. What does investing by selling premium create? Does it create an instant dividend? Does it create a discount on an underlying security? Does it create a profit buffer? Or does it create an expiring coupon? What do you think? And please answer all that apply. If you're thinking all of them, you're tuned in well. You're tuned in well. It's all of them. Here are some examples. I'm just going to fast forward to them really quick. 17% on Micron in 12 trading days. That's when the underlying stock went up. 15% on Activision in 34 trading days. That's when the stock went sideways. 14% on Allscripts in 86 days when the stock took a big dookie. Now, I'm going to start asking, it's going to get harder here. I'm going to start asking you some questions about what we're about to talk about to see how many of you are really tuned in. Listen, how can we lower our investment, increase our returns, and even convert a margin trade into a cash trade? Should we A, sell out in time options? B, should we replace the security with options trading at parity? C, should we give up and buy some mutual funds? Or D, what I'm talking about is not even possible. What do you think? Type in your answer to the chat box. Give you 3, 2, 1. Now, I don't want to sell out in time options. I see folks, a lot of folks are saying, why don't you just go farther out in time? The benefits versus, having to stay into a symbol, it's not worth it. The real theta decay comes in the near term options, that 3 to 5 week or even less option. No, the answer is right here, replace the security with options trading at parity. So what the heck does that mean? Option premium is the most when the option is at the money. That's why when we're selling premium, we like to sell ones that are at the money and near term. But when we go deep enough in the money, the option has very little premium. In fact, we like to target that it has less than 5% and it's almost completely in the money or intrinsic value. Now, what the heck does that mean? In other words, a deep in the money option behaves exactly like the underlying symbol. It moves dollar for dollar, only at a cheaper price. That's how we get our leverage involved. So you might say, okay, if I go deep in the money, I can get a cheaper option than the underlying stock. I get my leverage, but how far out in time should I go? Well, we've noticed that a typical position goes for about 5 months, and it's a fairly flat bell curve. That means many of the positions go only 2 or 3 months, and quite a few of them go 8 or 9 months. In fact, I've got a position right now that is going up on 10 months, and that's somewhat unusual. I've, in my history, have had one that went 14 months, but that's only been, once in the last close to 24 years. So here's how we do it. If our position is going to last about 5 months on average, we buy our back month option far enough out in time so that that expiration of that back month option won't interfere with selling many cycles of premium. In other words, It's like owning a rental property, and all of a sudden you've got these tenants and you've got this cash flow coming in, and then something happens and the rental property dissolves. No, we want to make sure that the tenants have paid as much rent as they can and they're out, and that's when the property might dissolve on us, right? In other words, we want to go at least 6 months out in time. We typically use option leaps because they have liquidity, but the real rule is we make sure we go out 6 months in time. So let's take that example of GE. These are prices from yesterday, $13.73, or we can substitute it with a $9 call that expires in January of 2022. It's only $4.90, much cheaper in price. So let's run through the example. By the way, this particular option has 96.3% intrinsic value and only 3.7% extrinsic or premium value. So instead of buying the stock, I pay $4.90 to buy the call, and then I sell that 41-cent near term at the money call for premium. Again, I create the same instant dividend, but now my initial cost is much, much less. I've got a discount on that back month option. I've created an expiring coupon. Let's go through the scenario. So what if GE closes above $14? So I paid $4.90 for that back month call. Because I get exercised on the $14 call, that forces me to exercise the $9 call, and I get to keep the difference, which is $5. $5 on the initial purchase of $4.90. That gives me a 10-cent profit. But don't forget, I get to keep the 41 cents when that option expires. So I walk away with 51 cents per share, or an 11.4% ROI. Not bad if we're targeting 6%, but what if GE goes sideways? And again, this is the ideal case because we can create an ongoing income. If I pay $4.90, I get 41 cents of credit. That 41 cents expires worthless. Lets me keep that 41 cents. That's 9.1% ROI so far. And I'm going to do it again and again and again and again. I'm not sitting in front of the computer doing this. This is one transaction per month. Allows me to earn 9.1% ROI. I told you my folks are earning double digits, like 11, 12, even 16% per month. And they're doubling their money about once every 4 or 5 months. What if GE drops? Don't forget about that profit buffer. The back month option would have to drop, and I don't know why that says 40 cents. It should say 41 cents. Our back month option would have to drop all the way to $4.49 before we'd have to think about any other measures, which I'm going to show you in a couple moments. But there's a profit buffer built in. Before I even show you that, I want to show you another example of a real trade instead of just GE. This is Cisco. Many of you have heard of Cisco. On May 6th, I bought the January 2022 $37.50 call. I paid $15 per option share. On May 10th, just 4 days later, I sold some premium. I made $2.10 per share. When it got expired, I got expired for the exact same amount that I paid, which was $15. That's the difference between the $52.50 strike price and the $37.50 strike price. When you start to include the little commissions, because you always have to factor in commissions, I wound up walking away with 13.8% ROI in just a few days from May 6th to May 21, literally 15 days, a half a month. So let me remind you, though, if we focus on that 6% per month, our investment will double every year. $1,000 turns into $2,000 in 12 months, $4,048 in 2 years, $33,000 just about in 5 years. And if you just focus on the 6%, either making it or beating it, you'd be a bona fide millionaire in 10 years if you focus on just $1,000 initial investment. And don't forget, if you grow your portfolio to $100,000, which a lot of folks do, they can start taking an income that's greater than the mean job here in the United States, $101,219.65 per year. And that's without having to work 60 hours. Couple more returns, 21% when the stock went up, 12% when the stock went sideways, 17% when the stock took a dump. Okay, last piece of the puzzle. How can we drastically reduce our return on risk? That means, should we sell half as much option premium? Is that what we want to do if we want to take care of our return on risk? Should we sell out in time options? Should we perhaps collar the investment by marrying a protective option? Or is what we're talking about not even possible? A lot of folks are saying this is when you sell out in time options. No, like I said before, selling out in time options is what we would do hardly never, because the premium just doesn't work. No, what we want to do is collar the investment by marrying a protective option. Okay, a couple more returns. 8% when the stock traded up, 24% when the stock went sideways, 13% when the stock went down. I think I'm going to just show you a real live trade. This is a trade that's been going on for a while. This is ideal, right? This is a trade where we started this last August. I bought 600 shares of ticker PAAS. I paid $34.73 per share. Now check this out. I sold some premium, $1.76, right? And on the same day I sold the premium, I bought a protective put. Now, I bought this protective put about 3 to 6 months out. In this case, I bought the January 2021. This was back in September 1st. And I bought it with a $34 strike price. That means if the underlying symbol dips below $34, this insurance is going to kick in, offsetting any losses I incur dollar for dollar, right? Because as soon as this $34 put is in the money, it starts paying me dollar for dollar to offset any losses. So where that profit buffer runs out, my protective put kicks in. I paid $4.75 for this. But now here's the cool part. The third Friday of September rolls by, which is when options expire. That's when I got to realize the $1.76 of premium. But then when I no longer had premium sold, once it expired worthless, I didn't need the protective put anymore. And so I waited for its best price and I sold it back. In other words, I did what's called rolling out my protective option. So I paid $4.75. And when I sold it after I didn't need it anymore, I got $5.90. Now, I want you to fully understand this, because a lot of folks will tell you about selling premium and making money that way. But I want you to notice that I actually turned the protecting of the position into a profit center as well. Not only did I make $1.76 per share on selling the premium, but as you can see here, I made $1.15 in additional money in rolling out my protection. So a lot of folks, this is a real cool little thing that I do here. A lot of folks don't even talk about that. In fact, a lot of folks, when they do protect things, it's a cost center, not a profit center. It costs them money. But you'll notice that the way I'm doing it, I'm actually rolling it out and making 2 sets of profits, my premium, and then I make frosting on the cake. I did it again the next month. In October, I made $1.47. I bought my protective option at the same time for $3 and a penny. And when it was time to sell back the protective option, I made $3.62. So not only did I keep the $1.47, I made an additional 61 cents of profit from selling out my option. I do that every month. So I collect 2 sources of income And notice, I'm doing about 3 transactions per month. I'm not day trading. I'm not glued to my computer. In fact, I'm up in the air about 30 feet doing trapeze during the day, learning how to run away and be part of the circus, as this money just sits there earning me transactions, right? And I've been doing this every month. Every month. In fact, we're up here and I'm looking for a good time to go ahead and sell my next premium and buy insurance. But I also want you to know, right, if we've got a $34 protection, this column here keeps track of what the cost basis is. You'll notice right away that after the first month, after I collect my first set of premiums, my cost basis is below $34. So think about that. I'm insuring the position for more than I have money in there. What does that mean? What does it mean where you get more money if the position goes against you than you even have in the trade? I bring you back to this because this is actually this PAAS trade. Notice there's a range high. That's if you get exercised, and a range low if you get bailed out. So here's the break-even price. This is the average time that one of our premium selling investments lasts. Now you'll notice this one that I showed you on Pan American's been going for 10 months now. I've got it up through 7 here in this drawing. The average trade that our folks are doing lasts about 5 months. So what I want you to notice is whether the position gets exercised or whether it goes against you very quickly, it doesn't matter, right? A lot of folks are saying, well, what's your win-lose ratio? It doesn't matter. If the underlying symbol goes against me, please notice that I make money either way, right? When the position goes against me, I still walk away with 50%. If it goes for me, I walk away with 65%. It's only in that first month where something might happen, but very quickly the positions become risk-free, right? Right after, not even up to the second month. It's right in the first couple of days of the position. So I really want you to understand that this is so cool because the market could take a full-on dookie on your foot and you're still going to walk away with a nice piece of money in these investments. So what do we have when our cost basis, our break-even price, is less than our protective bailout price? If you've been following along, is it a risk-free investment? Is it a losing trade? Is it too much complexity? Or am I smoking the crack pipe? Very quickly on, when your cost basis is below below that of your protective bailout strike price, you're talking about a risk-free investment. Okay, so I want you to review these 3 steps. Get your pencils ready. If you're feeling really confident this morning, get your pen ready. I want you to buy or short an underlying security. You're going to short an underlying security if you're doing a covered put. Or even better, buy a substitute option trading at parity. That's step 1. Step 2, I want you to sell a near-term at-the-money option for its premium value. Create for yourself an instant dividend and a profit buffer. And I want you to collar with a married option that is 3 to 6 months out in expiration to protect your investment. That's it. That's the 3 steps. As far as timing comes, please pay attention to this graph. This is ticker BBD. And you'll notice that in the medium to long term, it's going sideways, but in the short duration, it's testing levels of support and resistance. Those are very consistent positions to play. So we're going to buy our underlying symbol or our call option trading at parity, and we're going to put a bailout stop loss order in place right then. Once we hit a top, we're going to sell our near-term call option and buy that protective put. on the third Friday of the month, or if you're doing weekly options, it's every week. Your near-term call option is going to expire worthless, and then you're just going to wait for the best price to sell back your protective option. And then you're going to rinse and repeat. Do it over and over. You see here, you do about 3 transactions per month. In fact, if you really think about it, this part here, the near-term call option expiring worthless, you don't do anything there. That just happens. So it's 2 transactions per month. If you're doing the covered put, please pay attention. You start at the top. You either short the underlying or you buy the back month put option. You wait for the opposite reversal. You sell your near-term put option and buy a 3 to 6 month out call option as your protection. That near-term put option expires worthless. And you wait for the best price to sell back your protection. Make 2 sources of income. Now, here's a big question for you. How would you like to never miss a pick, minimize the amount of time you spend away from your loved ones, and most importantly, have support whenever you need it? Because that's what it's all about, isn't it? It's about saving time. This is where the most disciplined options trader, I like to call myself the most efficient option trader, saving time, creating clarity, and getting your results, right? And when I'm talking about results, I'm talking about cash results. So would it be okay if I take a couple of moments to tell you a little bit about my materials, my training, my tools, and see if they might be a match? Cool. Thank you. Let me tell you who this is for. It's someone who doesn't want to pay for multiple data subscriptions, wants everything they need in just one place, doesn't want to miss any opportunities, wants to spend more time doing other things. They don't want to do this all by themselves alone, trying to follow a book or something like that. And they want step-by-step instructions. In fact, this is for someone who wants to get consistent, reliable results. A lot of people ask, how much money do I need, AJ, to do this? Now, these are not get rich quick or no money down business opportunities, right? I'm talking about investing. You have to have investment dollars. An investor is someone who uses their money to make money. If you don't have money in the first place, this is not for you. You do need seed money to invest. And I've had people start with as low as $800 in their account, but the real sweet spot is about $4,000. So if you've got $4,000, especially if it's in a retirement account, this is an idea for you. So let me go through a couple of the things. What you immediately get access to is a web portal. This is our web portal. And you have access to a screener. This is an algorithm that I put together that goes through close to 1 million option chains, about 13,000 stocks, indexes, and ETFs. And every evening finds candidates that have premium and that are doing the right sort of pattern. And we even have a couple of additional screeners that I've been working on behind the scenes, like our Beta Picks 1 and our Beta Picks 2. For people that want to play around with me, because I've been developing these screeners over the years and making them more optimal and all of that good stuff. But what else do we have? Well, we've got an awesome download area where we've got all sorts of tools that makes planning these positions, trade worksheets, premium selling worksheets, all sorts of different worksheets that help you figure out the math so that you can determine how much of your personal portfolio you can put into these different investments. We also have, and let me come back to the home page. We also have a once-a-month lecture workshop that we archive, where we kind of go into details of different parts. We do deep dives. These are the learning replays. And every Thursday evening, and there'll be one this evening, we actually have a interactive workshop. We usually have about somewhere between 50 and 100 people get on the line, and they send me their favorite tickers. And then we go ahead and pick one that's the best of the best. And together we plan it out. And then I hand the plan to everybody. In fact, if we go here to this list of workshops, and again, I'm watching the clock because I don't want to go over here, but I just want to show you how cool this is. This was a ticker on UUUU. That's what we did last week. So here's the replay. And then you'll see right here, it's going to come up in a second here. We have the whole configuration wizard. Takes a second to load, but it'll show you exactly what our trade plan is so that people can just follow this. It's coming up. We can come back and visit it. So what's this all worth to you? We got the video tutorials, the monthly live classes and their replays, the screeners, the planning tools, the weekly live workshops. Oh, I forgot the best part. The best part is, here's the planning of the trade that came up. So you can see here's the planning. We'll let my browser catch up. The best part is if you've got a particular symbol that you're interested in, we have a direct line where you can email me your plan and I will review it, usually overnight, and give you my 2 cents. In other words, I want to look over your shoulder. And the reason why I want to look over your shoulder is because I want to make sure that you're successful. So how much is all of that worth? Me personally reviewing your trades, the weekly live workshops, the planning tools, the screeners. Think about that. What is that worth to you? But I also want to tell you one other thing. I want to make sure that you are successful. I want you to do this program for 6 months with me. I want to be able to follow along in your footsteps, help you out for 6 months, give you all the resources, let you come to the weekly calls. And my guarantee to you is if at the end of the 6 months you're not turning a profit, that I'll give you the amount you pay for this course times 2 back. And I've been running this guarantee since we started this particular program in 2007. And so I put my money where my mouth is, right? Double your money back guarantee. So double your money back guarantee. And one last thing for the synergy traders who are here, if you decide to be part of our program, I'm going to give you a strategy session with one of my coaches, because a lot of people, they know where they are, and they know where they want to be, but they don't know how to take the steps or what the steps are to get from point A to point B. So give you an hour of one of my coaches' time to get from point A to point B. So what is that all worth to you? I don't think I have time, but just really quick, Charlene wrote me an email. She had been a teacher, and I think teacher is the most underappreciated profession here, especially in the United States. She was a teacher for 29 years. She got sick. She was ordered out of the classroom. She still had 13 years left before she got retirement. And she thought she had cancer. She thought she was going to pass away, and she was actually peaceful about it. And instead, she got a miraculous recovery, which sucks, because I don't know if you guys have dealt with insurance before, but she survived, but now she had all these bills, and she didn't have a livable retirement coming in. So she got interested in the stock market. She met with me. Not only is she paying off her bills, making a living, she's actually started to travel. The tool that I give her is very easy to use. All she does is read the daily table, find a stock you're interested in, and follow the strategy set out for you. She recently made 14% by just spending about 15 minutes reading about the company, following the chart, and then waiting for expiration. Pretty cool. I love stories like that. So the usual price of our program is $597 for the 6 months. But again, for the synergy traders, we're going to take $100 off for today. So $497 for 6 months of access to the program. No other charges. At the end of the 6 months, you should be good to go. So here's how you do it. You go right now. Here's the website. It's optioninvesting.org/synergy. And if you've got your mobile phone, you can just take a picture of that QR code. That'll take you to the website as well. Optioninvesting.org/synergy. And there's a promo code to get the $100 off. In fact, I pulled up the website here. This is what you should see when you go to optioninvesting.org/synergy. In fact, I just saw that David graciously put the link right into the chat section of the Zoom call here. And there's where it says promo code. So let's put in 100, capital DISC, apply, and yes, it turns the price down to $497. Pay with credit card, pay with PayPal. You're good to go. I see that David also put the promo code right into the chat as well. He's a good guy. Listen, if you're having troubles with ordering, you can always call in. Our phone number is 970-266-8146. If you get our voicemail, it means that we're helping somebody else. So please leave a message and we'll have one of our girls in customer support call you right back. Don't pass go on this. Don't collect $200. I want you to go and do it right away because guess what? You deserve it. More importantly, your loved ones deserve it too. How do you like that? I finished right on time.